This is Leaders in Finance, a podcast where we find out more about the people behind a successful career. We speak with the leaders of today and tomorrow to discuss their motivations, their organizations, and their personal lives. Why? Because the financial sector could use a little more honest conversation. We'd like to thank our partners for their ongoing support. They are Kayak, EY, Mogelijk Real Estate Finance, Roland Berger, and Lapaya. Your host is Jeroen Broekema.
Welcome, listeners, to a new episode of Leaders in Finance. I'm delighted you're listening. In this extra episode, I'm interviewing Danny Vroegop, who's the co-founder and chief executive and investment officer at Colesco. Welcome, Danny, to the show.
Thank you. Thanks for having me. It's great to come out here and meet you.
Wonderful. Now, I'm very happy you're here. And first of all, before we dive into the content, I always love to get to know the person I'm interviewing. So that's, as I said, Danny Vroegop today. So tell me more about you and really where started your career? Maybe that could be a good starting point.
Well, from a heritage, I grew up in an entrepreneurial family, small business. I think that's where I probably got some of my drive and ambition to try and build things. I had a university degree, and then I actually started working in the financial industry. Actually, while I was studying, knew quite quickly that I actually wanted to work in banking. Because I was fascinated by the fact that you could be important to a company, but you would also see different businesses from the inside, meet interesting people, all of that, which was very romantic, I guess, end of the 90s. And some of that came true, some of that didn't come true. But I was fascinated by the fact that you get a grasp, you get to touch lots of interesting stuff and meet interesting people. And that's kind of also, I think, the red thread through my career and the things that I still also like about my job. But it started a long time ago. I've also been working in banking, capital markets for over 20 years. Before I started Colesco, that was at Rabobank. So actually only one name, one bank. But always developing yourself and coming into new opportunities. When you start your career, you think, "Oh, I'm never going to stay here that long." But yeah, before you know it, you're 20 years on. So that just happened. It doesn't just happen, but you go from one big thing to another big thing, and there's always opportunity in bigger organizations that are open for opportunities. So I was quite lucky to be there and make use of that and enjoy that and develop myself.
Do you recall what attracted you in financial services in the first place?
Well, one, it's obviously, it's about, I was good with numbers, you work with very smart people, but also again, the clients and the customers that you meet, very interesting people that, that can challenge you, there's problems that need to be solved, and you can actually, I know people say it's a 30-year industry and you provide capital, but you do help make something happen, right? And that's also, I think, a big role that finance providers have. And I also see that we as an industry can make things happen for the better.
With all that experience in banking, could you name one or maybe two jobs that you've had in banking within Rabobank that you, with the benefit of hindsight, you learned the most?
I had lots of interesting things to do, right? I met lots of interesting people, but I think the big thing here is, I had certain of these moments in my career where the first 1, 2, 3 years, you really have to invest into getting to know, to build a network, to getting to know the content that you're covering, to actually become relevant for your clients or the relations that you have. And you get really good at that job, and you kind of, that's you see that about appreciation, you see that about income that you generate, all of that. But at some point, you're getting into a bit of a comfortable zone, right? You're good at your job, people like you, customers like you, and then there's a bit of risk that you stay there because you think there's nothing better. And I've had now a couple of times that, okay, we're going to make a switch and you're going to start all over again, and then the learning starts again, and that's really. That gets you going, gets new energy. The learning curve is something that's, I would say is really important in somebody's career. And you need to change sometimes to actually start a new learning curve or make it even a bit steeper.
You mentioned the word clients a couple of times, which is not always the case in this podcast, I must admit. Okay. Is it in all the jobs you've had, were there always clients involved, or were you also purely on the risk side, for example, within the bank, or purely at another job that didn't involve clients?
Well, to be fair, when I started in banking, actually, all the smart people that went into the job market were. And this is going to say something about my age, of course, but were in Y2K and Euro issues. So I actually started more in the back office with reporting and IT and all of that. And I know now we have artificial intelligence and data warehouses and data lakes, etc. But back then already, a lot of these things haven't changed. So also starting on that end of the banks, I still benefit from knowledge I took on at that point. So I started in the back office, slowly moved over. I had a job in group strategy, and that's actually where I started having conversations with bigger clients that the group or the bank has. And that's how I also rolled into, let's say, more the relationship side of banking.
Right. So I'm really curious how Colesco came about. And when I introduced you today, I said co-founder. So it must be clear that you're one of the people that actually founded the organization. So could you take me back to the moment that you knew you were going to go into this direction? Or how did it all started?
Well, that's a long time back, to be honest. So I in 2015 already, I did an executive MBA at IMD. And there they really try to force you on what is it that clients are looking for. You need to do research the market, et cetera, et cetera. And I think that's where the idea actually started. And that there was, when you talk to clients and what is it that you look for, what is it that you need, how can we contribute, what is the success that competitors have. And I think at that point, private credit and the fund industry was really starting to be up and coming or starting to get established in the US, and it did not have made yet the jump to Europe. But that was that around that period it started. So the idea is actually from there, and then I actually had to a couple of iterations or a couple of times we pitched it and we tried to get support for it. It didn't work. We had to adjust the idea. It all had to do with what's happening in the market, what are clients looking for, what's the job to be done actually, and how can we actually do that for the best. So this is already a bit, it's been quite a bit in the making, but we started as a project, more as like a side hustle or a side project, and that turned into a department, and that turned into a business. So it's not an overnight thing. And it's not something that we totally thought out on day one, but we had to listen to people, take the input, and then develop it. And that's how Colesco got started.
Couple of follow-up questions. First of all, so it's really thanks to your time off, quote unquote, at the business school that you actually came with this idea.
Is it the business school? Is it not? My ambition when I went to the business school that I at that point I think I was in banking for 15 years thinking. It's not about learning to think outside of the box, but outside of the bank, because you're very much busy with risk management. It's always about what are the risks, what are the mitigants. So for me, this was also a bit, okay, let's get some exposure to other people and other ways of thinking. And yes, I took that with me into Colesco.
The other follow-up I wanted to ask you is, you said we. So who were the other people? Who are the other people that came up with this idea together with you and founded the business, also got the support from Rabobank?
So the idea indeed started in 2015, and I presented that to the board, and then we had it again in 2017 and 2019. And by now, we started with one or two people taking time out of their schedule to start Colesco. And where we are now, you meet people in your career, you think, oh, those are good people, we need to try. At some point, we need to hook up. And that's how we got the others involved. So it started with that idea. And then also within Colesco, we're not a cooperative, not like the parent, but we do like cooperation. So people contribute to get to this end result.
We've been speaking for about 8 or 10 minutes now, and I'm really looking forward now to learn more about Colesco, because we're talking about how it came about. What actually does Colesco?
Yeah, so Colesco is a private credit specialist. We have the mission to unite capital and purpose. So what we try to do is combine institutional capital from insurance companies, from pension funds, big professional parties, to marry that with entrepreneurial ideas and ventures and opportunities that are there. But the central theme for us is that we are looking for businesses that want to make a contribution to a better world or have ambitious sustainability plans, and that's a niche that we operate in. If you look at how we're organized and the people we work with, actually, for a large part, we're still doing what we've always done. 20 plus years experience in lending, in capital markets. But now we're not doing it on behalf of the bank balance sheet, but we're actually doing this for our other customers, being the institutional investors, pension funds, and insurers. And that's what we do. So we originate, we structure, and then we manage credit on behalf of institutional investors.
So what kind of credit is it? Is it mainly lending or only lending?
Yeah, so we're indeed a private credit specialist. So it's lending, it's loans, which could be on different parts of the balance sheet, from senior secured to maybe a bit more subordinated or more risky on the yield curve. But it is all fixed income lending products.
So there's no equity, right?
No, there's no equity.
No. And what are the kind of customers?
Yeah, so at Colesco, well, actually maybe also a bit of background. The original long name is Colesco Capital Collective, so 3 C's. So Colesco is actually Latin for growing together, and that's also the thought behind this, that we want to grow business, we want to grow economy, we want to grow sustainability and good behavior with companies. Capital is obviously how we do it. And the collective part is around, we like to do things together, right? We're not a cooperative, but we do like cooperation. So we do it together with the institutional investors, which is a client group. We do it together with the borrowers, which are usually businesses, could be private equity owned businesses, could be family founded and owned businesses. And obviously with the team that works at Colesco. So those are the 3 main stakeholders for us in our business universe.
And tell me more about one of those 3, the borrowers, because what are the typical characteristics of a borrower in terms of size, in terms of maybe sector they're operating in, geography-wise, or any other factor?
Yeah, so for Colesco, we have a European mandate with the investors. So that means we can find businesses all over Europe.
And it's not European Union, right? It's Europe.
Europe. So including the UK. We probably wouldn't. We don't go to Eastern Europe, but it does include the UK, also post Brexit. But so it's European businesses. What we say mid-market, which we have defined anywhere between 10 million EBITDA and 100 million EBITDA. So that could be small businesses, but also already a bit larger businesses. And it's usually we get on board when they are doing something strategic, right? Something exciting. When they're bought by private equity, or when they're buying the competitor, or when they're doing a really big capital expenditure expansion plan. Those are the moments that we try to help and be there for the borrowers. And the nice thing about, let's say, this mid market is, also when we're talking about sustainability, for instance. These are businesses and they are managed quite direct, right? The people that are actually at the table, at the desk, they are the ones taking the decisions. They need to do the work. If they say, well, we have an ambition to reduce carbon footprint or whatever it is, they will have to do it, right? If you're a big listed company, you probably have a sustainability department with specialists who know how to talk, what to write down. But here you're talking with the management that actually manages the business. And that makes it fun and exciting and quite direct, because if they are convinced we're going to do this, it's probably going to happen. So those are the elements that are really, really nice about this particular segment in the mid market, because you do meet entrepreneurs, you do need investors, but they're all looking to grow something, to make something bigger out of what they have.
And you talk about 10 to 100 million EBITDA. So in terms of lending, how big are the sizes of the loans?
Yeah, so usually we start looking at a financing package as of 50 million and upwards. And
typically a loan, or in club lending, or in syndicated loans?
We typically try to be, let's say, the leading party in whatever financing is going on. That usually starts by doing it as a sole lender. But we also open to work together with others if the client wants that, right? And so very often we also work with banks that join the financing. So we're kind of open, but I think the big thing for us is to have control about the capital structure, or at least the debt structure. Just also in case it doesn't go according to playbook, then at least we are the ones that we control our own destiny, so to speak.
This is Leaders in Finance with Jeroen Broekema.
I should probably ask one of your customers, but you probably know the answer yourself as well, which is why do they choose to work with Colesco? Why do they get a loan from you versus getting a loan from, for example, a bank?
There's a few ways of answering that or looking at that. So banks provide a different product than funds provide, right? What we see is that they need to club to do a certain amount, and usually we can actually do that amount by ourselves, which means there's a one-stop shop for negotiating, explaining, all of that, right? So usually when they are looking for a bit more speed, it's probably more speedy to look for a fund solution than to look for a bank solution. The other thing, which is also often heard, or at least highly appreciated by clients, is so it's speed, it's flexibility, but also confidentiality, right? The less people you talk about in the process, the less people that are involved.
Especially in M&A transactions.
Exactly, yeah, because obviously there are lots of parties involved, and sometimes just being a day early or a week early or keeping something a secret when you bring out when you make a bid can make the difference between winning it or losing it. So also this confidentiality, they really appreciate. So there are these instances where we actually get a call ahead of the market. And where people say, look, we're looking at this. Could you have a look? What do you think? Is this something you want to work on with us? And then we can keep it in a closed circle to get it done. And yeah, for us, it's then very important to make sure that you're quick, right? If you think, well, this is not for us, or this is not going to work, you need to actually tell them that at the start and not minute to midnight. So that's also part of your reputation, is that you give them a quick answer, right? And if you give them an answer, that's also the answer that you should follow through on, because obviously nobody likes a time waster. But you are part of their success, and you're there to support them. So that's clearly what we need to do. That's where the value add is.
Makes sense. And for this speed and flexibility, as well as confidentiality in some cases, or in any case, but in some it's more important probably, do they pay a higher interest rate because of this? Or is it hard to say whether you're cheaper or more expensive than in the mainstream bank?
Well, the standard answers were way more expensive than the bank, right? So there needs to also for but that also has to do with the investors, because investors are looking for a yield pickup. So they are clearly looking for a premium above, let's say, market rates, and private credit is an instrument that provides that to them.
So does it also mean that maybe some customers come to you because they find it very hard to get a loan from a bank? Because that, I assume, from a risk perspective, is not the kind of business you necessarily want to attract.
No, yeah, you're definitely right. So the credit underwriting part of the job is one of the most important bits, because it's very easy to provide a loan. It's more difficult to get it back, right? So those are some of the basic principles. But what we have, so yes, we need to be very diligent and also be quite controlled on what you say yes or no to, because saying yes today makes or breaks your success tomorrow. So that's something that we take very, very seriously. But at the same time, we do see that customers are willing to pay a bit of premium to get that service.
Right. And in terms of risk management, I'm very curious. Like, who signs off on a loan?
The management and decision making is done within the fund structure, the Colesco fund structure. So it is all done, let's say, independently.
What does that mean exactly? Just to give me a concrete example. Well, independently, does it mean there's a committee, or is it just the co-founder alone?
No. People usually ask this to see does the bank take the decisions or not. No, there is a committee within Colesco which has representatives from various angles. Right, so we have, let's say, the business. We have a risk conscious in there. But we also have our responsible investment officer in there, who also is fully voting. And then how's the decision making done? It's on a unanimous basis. So we all need to agree that this is a good deal or we don't do it, which means that the risk could say no to a transaction, but also the responsible investment officer could say, I don't like this, we're not doing it. So yeah, we think it's a good basis to do things on a unanimous basis, because we need to preserve capital, and you really need to be convinced that okay, this is a good loan to make, and this way of decision making works for that.
So how many people in total then make a decision on whether you do it or not?
Well, we need to have a minimum of 4 to do that.
4 people, right? And you said speed is really important. So you're quick in your decision making. Does it mean that you can decide within 48 hours, or is it 2 weeks, or what are the kind of time length I should be thinking about?
No, these transactions usually happen under a bit of time pressure, and you can get from, let's say, depending on the starting position, but let's say from the start to a credit decision, to actually sign a document with a customer and take a commitment. We can do that in a period of 3 weeks.
I guess it's really fast, especially when it's like tens of millions, right?
That is really fast, and we still because you still need to very much do your homework, do your diligence, do all the research, which is partly done because we get the buyer is also providing us information on the diligence that they're doing. But the other bit that we're also doing is doing our own investigation and having feelers and conversations with people from the industry to make sure, okay, do we understand this credit from back to front? So there's a lot of work going into that. 3 weeks can be done. Sometimes it takes longer, only because the processes that are set take longer than that. But yeah, you need to do your work before you can take a decision.
So I don't know if you're allowed or able and willing to tell us, but how much have you done so far?
Yeah, so we've at the beginning of the year we published that we've got now a bit over 800 million in the let's say in the platform, and we've already lent out a couple of hundred millions at where we are today. With more to come before the end of the year, I dare to say. Yeah.
Right. Do you feel a lot of pressure to actually get all the capital to work? Because ultimately you don't want to lend to stuff, as you mentioned earlier, lending is easier than getting it back. But at the same time, you don't want to waste capital you have in your pocket, right?
No, certainly there is deployment is important for investors, but we do think that sometimes you have to do your diligence, but you also have to be disciplined. So sometimes you have to sit on your hands because you think, well, it's not a good asset, which could be it's not a good credit quality, which could be the sustainability story doesn't add up to us, or we don't understand it, or we don't agree with it. Or it could also be it doesn't have the right risk-return profile. Great company, great story, but it's not enough to justify putting the investors' capital to work at these rates.
And if it happens, I don't know if it already happened, but if it would happen that it doesn't work all out, do you have your own like kind of financial restructuring recovery department or a couple of people that work on that? Or is that in cooperation with another firm or with Rabobank? How does that work in practice?
No, so if you look at the team, we're a relatively small team, but we have very seasoned people on board. We've all gone, let's say we've gone through a couple of cycles on when things go well, but also when things go bust or not go so well. So it does work that when you originate a loan, you also manage a loan, also when it's more difficult. So that's all done on board. And then we have people with backgrounds in financial restructuring, people with backgrounds at law firms. So I think in the mix we have all the capabilities aboard to actually manage that in a proper way.
Did you already lose money?
No, we didn't lose any money.
No, you're not going to. You're smiling, so that's good.
No, but it could happen, right? This is it's a lending business, so things go. You can't tell in advance. And there will be instances where it's going to become a bit more exciting. But so far, I think we made the right calls.
Happy with the progress?
Yes, we're never happy because we're always more ambitious. But I think but when you stand still and think, okay, are we happy with where we are right now? I think so. Are we happy where we need to go tomorrow? We have more ambition.
No, I get it. So you already mentioned the team. You said it's relatively small. How many people work at Colesco?
Yeah, we're now with 17 at the moment.
Wow. So I understand you can be fast because within a bank, there's hundreds of people working on this often.
There's a lot of people working in the bank because they do need to follow protocol and systems, because that's how it's set up, and that's also how they manage the big balance sheet with all the complexities that are there. I think that's one of the things that we try to do. We took the things that work really well within the bank and try to design it a bit different with Colesco. And so very much the credit. And the credit underwriting is really one of our core processes and core capabilities. So we very much invested in that, and then a lot of the other things we've outsourced, right? So we actually have the flexibility, and we also have the quality to handle a loan book, to report on that, to administer it. All of that is done up to the highest professional standards. But the team can focus on what is important, which is the clients and the lending. And the team does not have to spend too much time on all the other processes that normally also need to be done.
You mentioned earlier that you have someone in your team that specifically focus on, do we actually want to do this? This is in our kind of sector focus, or does it fit, our, my words, but our moral standards and etc. Does it happen often that you actually want to do something from a kind of business perspective, but you ultimately are not doing it because of the reasons I mentioned before, or moral decisions?
Well,
moral is maybe a strong term. What term would you use?
No, but if you look at how we process and the transactions that we look at, I think half will fall away because we think credit quality couldn't be isn't what we want. And then of what's left, there's another a good part of where we say, well, the sustainability story isn't adding up for us. But I think what is important for Colesco, if you work at I think generally if you work at a lender, it's all about what's the credit quality, what's the return, and then that doesn't meet the sustainability standards. I think for us, it starts the other way around. We start with, what is the story here? Does this company contribute to society, or what are they doing to trying to improve what they're doing? That's about 50% of the analysis, what we do next to the credit analysis, right? Because we do try to run this. We run a no compromise model, right? The credit quality needs to be good. The sustainability quality needs to be good, and the return needs to be good, and all those need to be green. Otherwise, we don't proceed.
It's quite high standard. So a lot of stuff, you probably end up not doing a lot of things then, if you have this no compromise model, as you mentioned.
You are quite strict in the acceptance criteria, but. Yeah, there's a big market, and we don't need to do everything, right? We need to find what our investors want us to find for them, and as long as they are happy with us, we're doing a good job.
Yeah. Before we go to the other side, the asset, the people that actually give you the assets to do all of this, but a couple of more questions on the borrower side, because I'm really curious. How do you acquire new customers? What are the ways you find them, or how do they find you?
I think most of what we do comes from, let's say, network connections that you have. When people start, as I mentioned, when people start doing something exciting, I think, okay, now it's time to look at, can we actually finance what we're intending to do? And you get that phone call from a partner at a private equity firm, or from a management team. Sometimes you get it from their lawyer or from their accountants. So that, it's actually all coming from people connections. Not so much from marketing or other ways.
So you need to spend a lot of time on networking, getting to know the right people, right? I guess.
That, or you should have been doing that for the last 20 years, right?
That helps.
Yeah,
you've got the network already.
You got the network already, and obviously, what we do is our reputation. So we also need to do it at a high standard and deliver on what we promise. And as long as you keep doing that, your network keeps growing, and they keep remembering you, right? So.
Yeah, and I guess once you've done one M&A trajectory and they want to acquire something new, they will probably go first to you again.
No, exactly. So people look for, if you deliver, then you're obviously a solid, trustworthy partner, and that's what we're trying to be. And we are probably, we probably don't service the whole market, and we need to relationships that we appreciate that, and they appreciate us, and then you've got a solid partnership.
Do you have a bit of a view for me on where your exposure is, in which countries, and maybe what sectors most? Is it mostly in energy transition, or in food, or in inclusive society? I mean, these are the things that you particularly focus on.
Yeah, indeed. So these are the three focus areas. Sustainable food, so which is around how can we feed the growing population with only one planet. Energy transition, of course, and I think this also very much moves into everybody's now about we need to invest in defense, but I think probably one of the main drivers of our liberty and being able to defend ourselves is actually energy security or energy independence. So this whole topic around energy transition is actually also quite important from that perspective. And inclusive society is very much around education, healthcare, things that are services that are necessary, yeah, for the broader population. What we see now is that especially, there's transactions in all these sectors. Where I must say that the energy transition is the one that's been most active, let's say, this year for us.
And geography-wise?
So geography-wise, we have a European mandate, but it's fair to say that all the assets that we've done so far are Dutch assets.
Are Dutch?
Yeah.
Okay. So you still need to go further to other countries, or is this one of your main funders are actually saying you have to do it in the Netherlands?
No, I think there's you can draw a parallel. Huh? If a direct lender has the head office in Paris, most likely a large part of the portfolio will be French. If the lender has a head office in the UK, it's probably in London. It's probably going to be lots of UK assets. We obviously come from the Dutch Benelux market, so that's where the network is the strongest. So a lot of opportunities will come from that. And then one of the partners just started before summer, and we're actually starting European coverage now. So the pipeline for that is growing. But in 24-25, we are mainly active in the Dutch market.
Right.
This is the Leaders in Finance podcast with Jeroen Broekema.
I'm curious, when you are going to work with a new customer, are you allowed somehow to tap into all the knowledge that the Rabobank has on that particular customer? Because often that must be the case, right? Because you're in the sectors that they're also quite active in, especially food.
Yeah, so I think there's a few questions in that question. I think the main point is there are information barriers, right? So we cannot tap into information that the bank has about a certain party, and the bank cannot ask information about relationships we have with the party. Having that said, if the client would say, "Hey, I'd like you to team up with Rabobank," then that would be possible. But the third leg to that answer is, Rabobank obviously is also a knowledge bank. They have big teams with people that follow, study, research the food and agri value chains, also in energy transition, sustainability. There's a huge knowledge and network within the Rabobank group, and that is accessible for us. So if we wouldn't have access to particular companies' information, but if we were having questions around, hey, what's going on in this market, then there's probably somebody that can help us understand it.
And that's all on the content side, which is very clearly explained. But also, for example, relying on the KYC they may have done already is not allowed. You need to do it yourself again.
Yes, but that also has to do with your fiduciary duty towards the investors, because they will want or they want that you that the KYC process is in control, is done by the fund. So that's all separated and set up to certain to the standards that are required.
Right. From a regulatory perspective, could you tell me a bit more about how this is all regulated? What you do?
Yeah, so funds are regulated. So we have actually an external AFM that helps us manage the fund. We have an external administrator, as I mentioned, that administers the loan book for us, and also does the fund admin. So I said we are very much, let's say, front office client focused. And then the AFM is under AFM or in Luxembourg CCSF, but it's all it's regulated, but it's not the bank regulation that we have to comply with.
Which maybe also helps to be faster?
Well, yes and no, I guess. I think where the benefit that we have is we obviously are small and agile, right? We can be the speedboat. We're not the oil tanker or the big ship that needs to make turns. So it might not be a fair comparison saying, well, we're more agile, but that's also because we're newer and we set it up a bit differently, by design. But that, given that we are, I will say we're like a focused restaurant. We only do one product, which is lending, but we do a really, really good job of that. But that also means we're small, and that also means we can run. We need to run the processes, but we can actually make sure that they run quite smoothly and fast after one another.
Great. I love the focus restaurant. You're not only serving pizza, but also French fries and all kinds of other food. I already mentioned earlier, I wanted to talk with you also on the other side, the people and the organizations that supply the capital. So could you tell me more? I saw in the Dutch Financial Daily a huge deal with APG. Is that the main funder of all you do? Or are there many funders?
So as I mentioned, we're quite ambitious. So we're, let's say, continuously in a fundraising mode. So we started, which is a very beneficial place to be, also with the share that we have. So Rabobank is a big investor, APG is a big investor. There's other investors, but it's not very unless they agree that their names be put out there. We don't talk about that, but. Yeah, we're continuously looking to grow the pool of professional investors that we have to fuel the strategy that we want to put out.
Is it only institutional investors, or can it be family offices as well and those kind of funders?
Yeah, so we're not excluding family offices, but we are looking now at the big institutional clients, just also because that regulatory-wise that makes things a lot simpler.
How do you look at 800 million? Because it's a lot of money on the one hand, and in institutional country, it's not that much at all. So do you think this is just getting started and you want to do tens of billions, or is this already very large for a startup, quote unquote?
It's definitely very large for a startup because I think we're at the moment the biggest or one of the biggest funds in Europe with let's say with the strategy of being being on the sustainability edge. So we're the biggest in that, but the ambition is to grow this, right? And I know some of the other people, it's all about scale. I don't know whether we're going to get to tens of billions, but we do think that this strategy deserves more capital than we have at the moment, right? So we keep pushing and we keep trying to get people to support Colesco and so that we can finance more businesses.
And not having the capital on your balance sheet means you need to serve two kings or queens all the time. What's harder at the moment? Is it harder to find all the funding because you're continuously raising funds? Or is it harder to actually deploy it to the good companies?
I think both sides need to work quite hard at the moment, right? Because as said, you can make a wrong decision when you're providing a loan, and then you create the problems for 2 years down the line. So that remains a key focus area. But the fundraising part, and that's also a bit the entrepreneurial bit of Colesco. We came into this business and we know everything about credit, but the fundraising thing was new to us. Hence the learning curve. Yeah, and as you go along, you learn, and it's quite a challenge because we're not a first time. We're a first time fund, but we're not a first time team, right? We have very experienced people. It's also set up, let's say, to blue chip standards. Also thanks to the parent company, and that's how we try to convince people. But at the first glance, they will say, "Well, we don't do first timers." And you have to overcome that hurdle first. Once we have the conversation, once we're in the room, they can actually understand that we're actually serious. We thought about all these things. It's set up the way it's supposed to be. But fundraising,
Isn't it much easier now? Ultimately, if you have APG, one of the largest institutional funds or pension funds in the world, somewhere, 600 billion or something, on board, that's a huge stamp of approval, right? Across the globe.
Yeah, so we once we put the press release out, the phone also started ringing instead of us just dialing out. People also started approaching us. So no, that's obviously a huge stamp of approval, and they've been very diligent in the process that we had to run. And you don't get that stamp of approval easily. But that clearly has been that changed the game for us as well.
You have very strict, I mean, relatively strict, or maybe very strict, depending on where you're coming from, on what kind of borrowers you want to serve. Is that also on the funding side the case? Do you care where the money comes from? So, for example, if the State Fund of China wants to invest in you, would also take that money, or any other example you can come up with?
Well, when they
Difficult one, right?
That's a difficult one, right? Because if they stand on your doorstep with a check and they say, will you say no? We probably would say no, right? So our aim is to get the money from European institutional investors, and that kind of that let's say that universe is already enough for us to enough for us to take a bite out of, and also enough to fuel the strategy that we want to do.
You have this great insight in all these companies you've seen over the past decades, but also at the moment. What's your take on the geopolitical situation? Very, very difficult and broad question, but you must have some idea of how the economy is doing, right? Because you see all these businesses, I mean, they're the driver, a big part of the driver of the economy. Are they very concerned about what's happening, for example, in the US, or the wars in Ukraine and Gaza, and the tensions around import tariffs, et cetera, et cetera? You know, the list is very long.
Yeah, at the moment, what you see is that people also are looking for a bit of stability, right? Doesn't need to be much, but they do need a bit of stability before they take big decisions. Having said that, the last 5 years have been like a roller coaster for lots of the business, right? COVID, inflation, Ukraine, tariffs, and I think if you look where we are now compared to where we were 5 or 7 years ago, these companies are a lot more robust, and they've actually diversified away from lots of exposures that they had. So I think in general they should be actually be in a good shape to manage the challenges that come across. But yeah, obviously we had, for instance, something in the credit committee in November, December. We said, well, they have a huge potential in the U.S. market, and they have they have exposure there, and they have people there, and it was all great. Up until let's say until Trump came along, and they said, "Well, we're gonna tariff the hell out of this, that, and the other supply chain element." Nobody saw that coming, right? So this happens, but then you look at the companies are they react to that. They can be innovative. They are problem solvers. And then 6 months down the line, yes, it was a problem in January, February, but by now they actually found a way to work with it, and also that resilience and that motivation to deal with whatever comes across is obviously also an inspiration for us. But it's also obviously part of the credit underwriting. You know, if you finance a company, you also finance a team. Do you think they are capable of handling these type of challenges?
Are you very close to the entrepreneurs? Once you have lend them the money, are you very close to the management, or are they're really hands off as long as they repay you, including interest?
Well, I think we prefer to have a good relationship with the borrowers and with the management teams, and they are the ones that know how the business is run, and they are the ones that also in the end make sure that we get our repayments when the time's there. So we like a close relationship, but you also need to know when you need to be close, because you don't want to be a distraction to them either. So it's always a bit of a balance or a way of building a relationship on what are the set times to be in contact, when you give each other a ring. We're always open to have that close relationship, and sometimes it's there from the start, sometimes it builds over time. But also when you go through a few, let's say, exciting times, which could be good or bad, and you're there for them, that clearly helps, and that's how you build. That's how you build a relationship over time.
Leaders in Finance with Jeroen Broekema.
Before I'm going to wrap up by asking you a couple of semi-personal questions in this whole journey, I would love to zoom a little bit in on your relationship with the Rabobank, because they're the main shareholder, the only shareholder. How is that relationship? But I can imagine that's, on the one hand, it's great. On the other hand, maybe it's difficult. I don't know. I'm just assuming some things here.
The relationship with Rabobank is actually very good. I think it started. We had it over how did this start, and obviously, they give you. It's actually quite despite the fact that it's a big corporation, a big bank, and lots of things are regulated and stuck in processes. They do give people. They like entrepreneurial people, and they did give us the trust to do this, right? And obviously, there's a trust but verify element into this. Which at points in time obviously was challenging for us, but at the same time, we just mentioned if a big pension fund comes and does their diligence, they like the fact that the trust and verify bit was there, and we actually got our stuff in order, our house in order for actually managing these amounts and their money. So this is it's a two-way street the way this works. Well, they're an investor in the fund. And I said they trusted us with the money, so we take decisions also on their behalf. And then there's a thing that we actually still are able to use network knowledge, people, resource. So yes.
Are you ever competing with them on a particular customer?
Well, in the end, the customer decides what they want, right? Whether they want a bank solution or a fund solution. So is there competition? Yes, there's competition, but it's the customer that decides on that.
Quite a strange situation where the equity is held by the bank, and maybe the funding also partly comes from the bank, but ultimately they choose to go with you or they choose to go with the bank.
Yeah, but
it's a different product, probably.
No, it's a different product, and I think part of the rationale or the thinking at the bank also was they are very much okay. Is there a demand for this by clients, by customers? Can we help customers this way? And clearly, this is something that the bank doesn't offer. So that was also the rationale. We want to stay in the market, be relevant, do things for our customers. So also setting up Colesco and having this opportunity to actually keep it, let's say, within the family is better than to lose it to an outsider, right?
I promised some semi-personal questions. So first of all, you're living in the UK, if I'm not mistaken.
Yeah, I live in London.
Most of the loans are done here so far. The shareholder is here. How does that work? Does it work well?
Well, for one, this is obviously partly a virtual world, right? And we're managing a remote team. So before I actually started Colesco, I was actually the global head. So we also had teams in New York and in Australia. And so yeah, you manage a business in an international way, and it doesn't stop at the Dutch border with Belgium. In London, there's still a big pool or still a big network of financial sponsors and private equity that do business all over Europe. So that's the main reason why we also have people in the UK. So we're in the UK, we're in Belgium, and we're in the Netherlands, and that's kind of the triangle on which we cover Europe.
I live myself in London, and I think there's a bit of a difference in terms of working culture. You're more on the British one, like the 80 hours a week, or more on the Dutch 40-hour one?
Well, I try to be as efficient as possible. I don't think we're going to manage the 36 hours, and sometimes you need to work more or a lot more. But there's times that it's necessary, and there's times that you might actually want to do something else. So we try to be sensible about it. But the culture is somewhat different.
Do you feel like an entrepreneur fully? Because it sounds like you're completely running your own business with your team. Or do you still feel like a banker?
I think if you look at the people that work at Colesco, a part of them originate from Rabobank. But I think we've always felt the responsibility to run a business as if it's your own business, right? You want to make there shouldn't be a difference when you make decisions, whether you do it for your own wallet or for somebody else's wallet. You need to make sensible decisions. So I think that sense of ownership has always been there. And the entrepreneurial side here is that we took the solid gold brand off the door, and now we need to try and make it on on our own as well, which is the challenge, and which also kind of feeds the ambition and runs the engine, right? So
I'm not sure I got an answer. Is it the bankerpreneur or something, or is it a combination of the two? But anyway, if someone wants to work for you, what will be a reason why they should, and what would be a reason why they shouldn't?
Be a reason why they should, and what would be a reason why they wouldn't? So I just thinking about it, we're entrepreneurial people. The thing that we want to give to people on board is actually that they have freedom to develop, that they get responsibility, that they get to work on exciting transactions. So there's lots of reasons why you want to work at Colesco, but you also need to be prepared to put in the hours, sometimes manage or handle some chaos, because nothing. We're always doing new stuff, and not everything is protocolized. Yeah, so we're looking for people that are entrepreneurial, and if that's what gets you going, then we could be a good employer for you.
Great. Is there something you love to read or listen to, or what kind of media do you take in particularly for this job? Is there something you could share?
Yeah, so obviously there's podcasts out there, right? Also like this one, because if you learn about the people, what gets them motivated, you also always learn about stuff that's going on. There's lots of Financial Times, of course, in there, and there's other publications coming out. We actually follow competitors quite well, right? So you need to keep all the senses open to get the information in. And sometimes there's reading coming out, or certain people are in the news. It's actually also, on the one side, it's all about the economy. It's big movements. There's bigger trends in there. And on the other hand, it's good to listen to your clients, and the customers are actually quite close to the ground and are in the market. So those are very important sources for taking decisions. And you have to always be open for new things, right?
Last question from my side. I said I was going to record 30, maybe 40 minutes, and it's already 54 anyway. Doesn't matter, because it means I really and highly enjoyed it. But before I start to thank you on that one, is there something, Danny, that we should have discussed, or we haven't talked about, that really should be mentioned here? I think this is a good moment to do that.
Well, I know you're always talking to people about what's your career advice to early starters. If I were to give some people advice, it's you have to make it happen, right? Just keep at it. And if people say you're wrong, maybe you're not wrong. It just takes a bit more time to get there. So that would be my advice.
This is really the perseverance part you mentioned earlier?
Yeah, the perseverance part, and you shouldn't be waiting for somebody to hand you an opportunity, right? It's better to make your own sunshine, and instead of complaining about the rain.
That's great. That's a great end for this podcast. So there's a lot of things I will remember. I highly enjoyed this conversation with you, especially the comment on I should start thinking outside the bank instead of outside the box is something that really stuck with me. But there were many other things. It was really interesting and great to listen to you, Danny Vroegop, who is the co-founder and chief executive and investment officer at Colesco. Thank you so much for taking the time. I have a small present for you after this recording to show you my appreciation for taking the time and coming over here to our podcast studio and talk to me. So thank you so much.
It was a pleasure. Thank you.
You've been listening to Leaders in Finance. We hope you've enjoyed the episode and would love to hear from you. What's on your mind? Who would you like to hear next? Let us know in a review, an email, or get in touch via our social channels. We'd greatly appreciate it. Finally, we'd like to thank our partners for their ongoing support. Kayak, EY, Mogelijk Real Estate Finance, Roland Berger, and Lapaya. Don't forget to check out all the other things we do at leadersinfinance.nl. Thank you for listening.